The vast majority of investors, 93% to be exact, believe that the election will affect the stock market. Moreover, 84% said that it would actually impact their spending habits. Now, should you actually change your investing habits or not before the election? Well, today we're going to dive into what happens to the stock market before the election, during the election, and then after the election. We're going to talk about what's happened in the past and also what makes this year just a little bit different than any other year. Hey all, and welcome back to my channel. My name is Humphrey and I make videos here on YouTube on personal finance and investing. So today's format of the video is pretty simple. First, we're going to look into how the stock market has performed before an election. Second, how the stock market has performed during the election. And you guessed it, how the stock market has performed after an election. Lastly, we're going to go over how I'm going to manage my money and what you should be paying attention to going into this new election. So let's go with number one because it comes before number two, and we're going to talk about how the stock market has performed before an election. Now, during an election year, in the weeks and months leading up to the election, we're going to experience a lot of volatility. Simply put, volatility is there because the markets don't like uncertainty, and we're really not too sure who's going to win the 2020 presidential election. Now, historically speaking, in the actual periods before the election day, according to CNBC, the S&P has traded positive in each 6-month period before a presidential election, except in the year 2008. 2008, if you remember, was when the last financial crisis was, and basically it was also happening right around the time of the presidential election. I think it's fair to remove that particular data point from the data set because it is an outlier in all of the other presidential election times. So here's that chart from CNBC, and we can actually see that in most years, in the 6 months before a US presidential election, the S&P 500 typically returns between 3 and 4%. Now, 2008 is just the one that we gotta have to ignore. But for the most part, we can actually see that the returns in the stock market are generally positive for most election years, including even in the Dow Jones. Now, for the past 6 months in 2020, the S&P 500 is actually up quite a bit. If we look into google.com and we just type in S&P 500 index, for example, we can see that on Monday, May 4th, it was trading at 2842. And right now it's trading at 3,400 and up at the time of this recording. So with this historical data and actually the data from this year, we can definitely see that before an election, the market tends to do pretty well. Now, obviously, volatility is going to start going up pretty soon because we're nearing the election. So what actually happens during an election? During election night, swings in the market can actually be quite volatile, and we can point to the last presidential election, which is back in 2016, as an example of this. From this article in Forbes, we can recall that during the 2016 election, when Trump actually won the presidency, the S&P 500 actually fell 5% in pre-market trading. That was enough to actually trigger a circuit breaker and actually halt trading for a period of time that day. But by the time the market had actually resumed its course and actually closed on the day after the election, the index was actually up 1%. So that is a crazy swing from 5% down pre-market to 1% to end the day. And that swing for that particular year made a lot of sense because back in 2016, I don't know if you remember this, but a lot of people were pretty shocked that Trump actually won the presidency. And I think that the market was sort of reacting in the same sort of way that most people were, which was shock, and they were irrationally just trading a lot lower because they weren't really too sure what to do. And then by the end of the day, it ended up smoothing out. Another interesting thing is that if we actually Googled 2016 Trump win and stock market, we get a lot of negative results. Results like the following. 1, a Trump win would sink stocks. Number 2, a Trump win would tank the markets. Number 3, Trump win would cause immediate stock drop. But what we actually saw from the years of 2017 to 2019 was that the average annual return of the S&P 500 was up over 14% each year. It seems that every election cycle, we all believe, and the media makes us believe or wants us to believe, that the new president is going to shake up the markets wildly. But is that actually the case? Let's look into the historicals for actually what happens after an election. If we look at the historical returns of the stock market by president, we can actually see that the overall trend is overwhelmingly positive. And historically speaking, since 1833, the Dow Jones Industrial Average has gained an average of 10.4% in the year before a presidential election, and nearly 6% on average in the election year. By contrast, the first and second years of a president's term see an average of 2.5% and 4.2% respectively. Now, knowing this information, one of the mistakes an investor can actually make is to try to time the market just around the election. Some will point to the previous quote that I just mentioned and say, well, years 3 and 4 are pretty good in a presidential cycle and years 1 and 2 are pretty bad. So what I'm going to do is I'm going to buy some stocks at the end of year 2, sell them at the end of year 4, and then repeat that cycle over and over. But should you actually do that? And the answer is no, you shouldn't. If you've watched any of my videos before, you should know that time in the market beats timing the market almost every time. And as long as you're staying self-disciplined, it's actually been shown that US election results have a very little impact on long-term returns. The one thing I do want to bring up this year, especially in 2020, is that with all the stuff that's been going on this year, there's going to be a lot more increased volatility, especially around this election. There's a number of factors that could contribute to increased volatility around the election, but I want to point out 2 of the biggest risk factors in my opinion. So this is an exhaustive list, but I'm just going to focus on the first 2. First is that voting results could be delayed past 48 hours. And I think this could definitely be the case. Due to the coronavirus, the mail-in ballots might take longer than expected. And second, if either candidate is losing on election day, they might actually, make the argument that the mail-in ballot system isn't actually perfect. So the last time something like this actually happened was in the year 2000, where the actual winner wasn't actually announced until December 15th, which is a good month and a half after the election. If you need a quick refresher on the 2000 election, or if you're too young to remember, like you're in Gen Z or a Zoomer, as they call them these days, basically what happened was the vote was too close to call, especially in one state, and that state was Florida. George Bush Jr. actually won Florida by a margin of 0.009% or 537 votes. But what they actually had to endure was a full manual recounting process that took over a month and a half because of the disputed results. And as you can imagine, the markets were crazy volatile for that month and a half because the whole world didn't know who the president was going to be. I mean, if we just take a look at this infographic here, we can actually see that the S&P 500 tumbled more than 8% during this uncertain time back in 2000. It was just a really volatile time for the markets in the year 2000, and we actually might see something similar this year because of everything that's been going on. So with that all being said, how am I going to be navigating the markets myself personally during this election year? First, I'm going to hold the course with my investing strategy, which is just basically to invest in a well-diversified portfolio consistently every month. Second, I'm not going to be fazed by the election volatility. I know it's coming, winter is coming. We all know that volatility is coming, especially this year. So when it does happen, I'm not going to be too fazed. I'm just going to hold true to my strategy. Third, I'm going to try to stay away from the headlines. We know from our first chart that I showed you guys today that the market tends to go up no matter who the president is, especially in the years after the presidential election. Since I don't need to liquidate my stock portfolio in the next year or 2 years, I'm not too worried about it. I'm a buy and hold for a long-term kind of guy. And in the short term, I can definitely handle the swings. Now, if you're someone that needs a lot of cash in the next year or 2 and you can't handle the swings, then maybe I'd say now might be a good time for you to pull some cash out just to sit on the sidelines. But me, myself, I'm not going to be doing that. I'm just going to be sticking with my strategy and buying and holding for the long term. Now, let me know what you're going to do in the comments with your own portfolio, but that's what I'm going to be doing. And let me know if you think that the election results will actually take a lot longer than expected as well. So if you got any value out of this video, make sure to like the video, subscribe to my channel because I post videos here twice a week on YouTube, and tick the notification bells because then you'll get notified every time I drop a video. Feel free to follow me on Instagram. My username is Humphrey Talks, and I post a lot of personal finance content. So if you're ever just bored scrolling your Instagram, you can always find me there. Lastly, if you'd like a free stock from Webull valued up to $1,600 when you deposit $100, just feel free to click the link in my description below. And lastly, thank you to all my Patreon supporters. I will see you guys in the next video, and may the best candidate win in 2020, and I will see you guys next time. See ya.